Rise and shine, everyone. Today is 27th of February, Monday, and I have got a stock trade that I would like to enter into once the market open. During weekend, as I was browsing through the stock, this particular stock come to my attention with the stock ticker of MTAG. This stock is actually a small cap stock, major under the industrial sector, with a market cap of about 412 billion. Look at the chart over here. Last Friday, this stock crashed down overnight by almost 30%. It first opened up at around 0.445 cents, and then eventually it did manage to make a high of about 47 cents before it come all the way down to close at 0.425 cents, and it did also make an all-time low of 39 cents last Friday. So a crash of almost 30% overnight is definitely huge. And I was trying to find out what kind of news would have warranted such a big decline, and I can't seem to be able to find any, except that it has just reported earnings on 23rd of February, Thursday. As we can see over here, the quarterly revenue has a slight decline from 56 million to about 47.4 million, and the net profit has also registered a decline quarter over quarter by almost 50%, from 12 million to about 6.7 million. So for such an income producing company and also a dividend paying company for the past few years, I would think that the drop was a bit overdone. This company has been paying dividend consistently ever since it IPO'd way back in 2019. The last dividend was paid on 20th December 2022. Then as I was screening through the chart, I realized that this stock has got the habit of having huge volume occasionally, like what it happened way back in 13th of May. It also registered a one-day volume of 107 million. If you look over here, the average volume for this stock is around 13 million. So to register a one day of almost 107 million is almost 10 times its average volume. So you will see when this occurred, eventually about 2 to 3 months later, it registered a huge spike up to almost more than double the price. So would it happen this time as well? Would it also double up after such a huge decline with such a huge volume? Okay, for myself, I'm not that aggressive. I'm just looking to do a swing trade in matter of days or probably weeks before I get out from this trade. I would nibble my position into this stock, so I would be looking to start my position to queue at any price between 39 cents to 0.425 cents, and set to lock in my first profit at around 51 cents, and second target profit at 0.535 cents, and the most aggressive will be 0.57 cent, and I look at the duration for it to play out in matters of weeks. At 51 cents, it would register an upside potential of about 21%. If you're aggressive enough and target at a profit of 57 cents before you exit from this trade, this would represent an upside of 34% of profit for this trade. Now allow me to share more with you what I can see from the chart of MTAG. If you look at the chart of MTAG stock has been on a downtrending since the 14th of February for almost more than a week before it grind higher for 2 days, and then the flush down all the way, which happened on last Friday, 24th of February. This chart, the way it is behaving, show me that this is a weak gap down. Most likely, the big institutions are doing this as a one final push to flush out weak hands so that they could accumulate this stock at a cheaper price. Now let us look at the 15 minutes chart. See how this stock opened gap down and trade down till all the way to 39 cents before pulling up to close at above this strong support level. Now look at this strong line. It is a 4 years triple bottom. So what does this tell us? This means that this level is going to act as a triple bottom, and it is a strong support level at around 41 cents. So this explains why last Friday, as the stock traded way below this strong support level, and eventually it still pulled back up to close above this strong support level to close at 0.425 cents. So on Monday, when the market opens, I plan to queue to buy this MTAG stock in few tranches. I would start to nibble into a small position, about 1% at any price between 39 cents to the last closing price at 0.425 cents, depending on how the market opens on Monday. Should this stock retrace lower to 39 cents again, trust me, I would buy with two of my hands for my second tranche as a way to dollar cost average down. The odds of it favoring an upside is higher, almost 80% and more. And I also find out why this stock is able to actually spike up so much within matters of days, or even come down by so much within a day itself. It's probably due to the public float on this stock ticker. I find out that this stock has got a public float of about 181 million, which is considered quite low. Usually stock with low public float, the movement of the stock would be way more volatile. So volatility is always the best play for swing trader. And if I were to look at the balance sheet of this particular small cap stock, it does have a strong cash on hand. As of 30th of June last year, it has a cash on hand about 127 million versus the total current liabilities that it has is about 28 million. This represents a 1/5 of the total current liabilities versus its strong cash on hand level. So when we trade small cap stock, it is important to understand the cash level that they have versus the liabilities that they have, to make sure that this stock is not on the verge of bankruptcy, even though we are just in it for a swing trade. This is just my way of playing safe. And also do remember to follow me on my IG and Facebook, as I will be posting my live trades on Facebook and IG as and when my trades got filled up. So this is my sharing for today. If you like the content of this sharing, do remember to like and also subscribe to my channel if you have not done so. And I shall see you again in my next video. Bye.